Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to weather storms that you might be facing when selling highly appreciated cryptocurrency, primary home, investment real estate, or any other asset that's subject to huge capital gains tax. Hey, I'm your host, Brett Swarts. In each episode, I am joined by some of the best real estate, financial, business, and wealth minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. However, sometimes it's not a guest. Sometimes it's just me talking about a subject that's been coming up recently in a lot of my talks with clients and with a lot of my strategic alliances. And so today's topic, we're talking about the three perfect storms facing wealth in America. And I think this comes at a timely time with just so much that's been happening the last year with COVID-19 and economic change and technological change and political change. And so there's really three perfect storms that are facing wealth in America. And we're going to start with the number one perfect storm. And this is the demographics of the baby boomer generation. And so this is according to the American Bankers Association. There's about 17 to 20 trillion dollars of wealth that is set to transfer from one generation to the next in the next 20 years. So this is my parents. I'm a millennial. My parents are baby boomers, and over their lifetime, they've amassed an amount of wealth. I imagine if you're a baby boomer, you've amassed an amount of wealth, and that's tied to really three main areas that represent the majority or 50% of America's net worth. And that's actually high-end primary homes, private equity, which is known as like businesses, and or commercial real estate. Those are all the illiquid assets. The other half of that is tied to stocks, retirement pension funds, IRAs, 401ks, and that represents the majority of America's net worth. So over the next 20 years, this study found about 17 to 20 trillion will pass as they pass it to their next generation. The challenge with that is a lot of that is subject to huge capital gains taxes. In fact, there's about 77 million baby boomers in the U.S. alone, and about 10,000 every day are turning 65. So you have this huge amount of wealth that's going to transfer, but the challenge is in this perfect storm for these baby boomers and for American wealth is that the taxation upon the transfer. Like, how do you transfer it without getting hammered by the capital gains tax? And what's the capital gains tax? Where it's somewhere between 30 and 50% of the gain, depending on what state you live in and what kind of asset class you have, and depending on your income and depending on a number of factors, and depending on any depreciation and recapture. And that's how the laws stand today. And so that leads into the economic storm, which is the second storm that's facing wealth in America. And this is interesting, right? We're seeing all-time highs on a lot of areas: real estate, primary homes, the housing market, commercial real estate, the stock market, right? We're seeing record highs. And the question is, when is it going to change? Is it going to change? And I mean, I think the answer will always be, yeah, it will have some change. At what point does it shift back to, let's say, a buyer's market? And so the storm here is kind of, I guess, a positive storm in that it's very high. But the storm, I guess, that could be coming, or maybe it's going to be here pretty soon, is the marketplace shifting, something like an '08 crisis or an '09 crisis, where things really fall, and people who, like Warren Buffett says, you see who's been skinny dipping when the tide comes back out. And so that, I believe, is a storm that's brewing. The other one with the demographics is already happening right now. And it leads into the third storm, which is the political storm. And so right now, we are looking at a huge potential change in a lot of policies, tax-wise, that are can be a game changer for all wealth in America. And the first one I want to start with is the stepped up basis being eliminated. So one of the proposals on the table is to eliminate or reduce the stepped up basis, which in and of itself has been something that wealth in America has counted on to be able to pass assets to the next generation in a way that's tax efficient, and also is a way that actually allows them to keep the assets instead of paying in tax. So let's explain what that is real quick. So stepped up basis is essentially, let's say you own a piece of real estate for $1 million, and now let's say it's worth $5 million. And you've owned it for, let's say, 30 or 40 years, and you pass away, and inside of your living trust, you pass it to your child or your kids. In the past, that asset would receive a stepped up basis, right? The difference between essentially what you had bought it for, let's say at $1 million, versus the new or the existing current price of $5 million. And therefore you could walk away and sell that asset and walk away capital gains tax free. It created a way to, again, pass wealth to the next generation without the heavy burden of tax. So if that is eliminated, that is a storm for wealth, because a lot of things will have to change. As it is proposed today, your kids could have to sell that asset, and the capital gains tax is actually triggered upon death. And that would mean liquidating the assets that you built up and for 10, 20, 30, 40 years. Same thing with a business, same thing potentially with stock. Okay, so these are just a proposal, right? That's just a proposal, but we don't know what's going to happen. But that is definitely a storm that's facing wealth in America. The second part of that political storm is the capital gains tax rate. So right now, federal is about 20%, but they're proposing to take it to 39.6. Okay, that's a huge, about doubling of the federal rate. So remember when I talked about the 30 to 50%? In the original part of this talk here? Well, now that could be 50 to 70%. So that's staggering amount of wealth that, again, is going to be paid in tax to the government upon the sale of an asset. So that's the second one. The next one to consider, to really be aware of, especially if you're in commercial real estate, is the reduction of the 1031 exchange to essentially $500,000 of gain on any one transaction per person. Kind of some different iterations there. It could be $1 million for a married couple, different ways to take a peek at that. But essentially, if you're selling anything that has more than a $500,000 gain, the 1031 exchange is going to be eliminated for you, except for that $500,000 gain, which is not great, right? Because as commercial real estate owners, if you've owned investment real estate of any kind, we've counted on the 1031 exchange as a way to build wealth and a way to stimulate the next deal to move forward. So those are just a few storms that are facing wealth in America. Here at Capital Gains Tax Solutions, we love to help you clarify your options to create and preserve more wealth. In particular, we focus on the capital gains tax ways to defer legally, such as using the 1031 exchange opportunity zones. But our favorite is the Deferred Sales Trust. We're experts and we focus in this area. We just believe it's such an elegant way to provide not only capital gains tax deferral, but income tax deferral, and also estate planning, and a way to diversify, get liquid in your investments, and be able to pay off debt, which in today's potential storms that are facing a lot of Americans, I think it's the perfect time to be out of debt, to have liquidity, have diversification, and have the ability to time, and this is really the biggest important part of the Deferred Sales Trust, time if and when you go back into different investments, including real estate, including stocks, bonds, mutual funds, and lending in different business ventures. So if you want to learn more about that, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And so I'll leave this video or this podcast with this last thought. What is your plan for your wealth given these three storms that are facing you and facing maybe your clients, right? Economic, demographic, and political storms. And are you planning now, right? And strategizing ways so that you can create and preserve more wealth, and all of your wealth or a lot of your wealth doesn't get taxed so heavily. And so look for the next video, by the way, and we'll talk about how we believe, this is such a win-win for everybody, including the government, right? Including the high net worth individual, including the business professional, and how the deferred sales trust is a great solution, elegant solution for all the parties involved. With that being said, thanks so much for watching this video. Please and listen to this podcast. Please share, rate, review, and subscribe. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is the best way for you to exit your highly appreciated cryptocurrency, primary home business, commercial real estate, all tax deferred, so you can create and preserve more wealth. Thanks so much and have a great rest of your day.